United States Securities and Exchange Commission, SEC, has opted to postpone its verdict on a series of Bitcoin exchange-traded fund, ETF, proposals. The delay affects a range of applicants, including industry giants like BlackRock, WisdomTree, and Invesco Galaxy, among others. This announcement, made through official SEC documents last Thursday, led to a noticeable dip in Bitcoin's market value. Upon the news release, Bitcoin's value experienced a significant decline, dropping 4.1% within 24 hours to settle at $26,100. The cryptocurrency market, already volatile, seemed to react strongly to the SEC's indecision. The SEC started scrutinizing applications from a mix of crypto-focused and traditional financial institutions like Wise Origin, a Fidelity brand, BlackRock, and Invesco Galaxy just last month. These organizations aim to pioneer the first spot Bitcoin ETF, a financial instrument that proponents argue would simplify retail investment in Bitcoin by eliminating the need for individual wallets or direct Bitcoin purchases. Rather than making a conclusive decision, the SEC has chosen to extend the existing comment periods, allowing for more comprehensive public input on the matter. New deadlines have been set. Wise Origin, Galaxy, and WisdomTree now have until October 17th, while Valkyrie has until October 19th. Bitwise faces an October 16th deadline. The SEC has a maximum of 240 days from the start of its review process to either approve or reject these applications. Historically, the SEC has utilized the full extent of comment and review periods to delay final decisions, making the recent postponement somewhat anticipated. Earlier this week, the D.C. Circuit Court of Appeals criticized the SEC's rationale for previously denying Bitcoin ETF applications as arbitrary and capricious. This came after Grayscale, a company under the same parent organization as CoinDesk, contested the SEC's grounds for rejecting its proposal to transform the Grayscale Bitcoin Trust into an ETF. Judge Naomi Rao, representing a unanimous court decision, pointed out inconsistencies in the SEC's approach. She noted that the SEC had approved Bitcoin futures ETFs, but failed to provide a clear reason for treating spot Bitcoin ETFs differently. Grayscale successfully argued that its proposed ETF was materially similar to the approved futures ETFs, given the nearly perfect correlation between spot and futures Bitcoin markets. The SEC's delay in reaching a decision on spot Bitcoin ETFs has stirred the market and raised questions about the regulatory landscape for cryptocurrencies. With extended deadlines and a court ruling that challenges the SEC's previous rejections, the future of Bitcoin ETFs remains uncertain but increasingly open for discussion. By keeping an eye on these developments, investors and market watchers can better understand the evolving dynamics between regulatory agencies and the burgeoning cryptocurrency market.